a big part of the Boost VC story has really been just doing things and making a decision and moving on and then being consistent. We need to go all in. The entire thesis of Bitcoin is really about building an alternative. There is sort of this idea of doing something that's against the grain. And so I think my entire career, the thesis is really about building these alternative institutions. I want sovereign software, sovereign technology. This business is a beautiful business. Like, it's an incredibly long holding period. And I actually think that that's a feature, not a bug. Like, illiquidity is good. When my grandfather was investing, there were, 20 deals. And then when my dad was investing, there were 200, and now there are 20,000, right? What we realized was we did have to choose Bitcoin, but we bought some Bitcoin in the fund, which was counterintuitive. No one had really done it. Very few people had done this.
Sure.
In venture, no one. Whenever you feel that little gut instinct, lean in, because that turns out to be the best investments. I had this insane conviction on this deal. I just feel that this is a chance to be a part of history.
Super excited to be here today with Adam Draper. We're going to be talking about storytelling, liquidity, and what excites him in 2026. Adam, thank you for coming on the OVNIs Podcast.
Hey, thank you for having me. I'm really excited, and again, apologize for being a little late, but
no one knows.
No one knows right now, but I still wanted to apologize because I think the title of my biography would be 10 minutes late, but this was a little later than that. So thank you.
Are you working on a biography?
No, I just thinking of titles of books. If someone says something and it sounds interesting, it's would that make a good title of a book? Is something that goes in my head. And then I'm like, oh, that'd be an interesting
that would be a good title
of someone's book. Yeah.
Well, I'm glad to have you because I've known you for 11 years. I've been meaning to do this podcast. You're someone we're a newer fund. We aspire to a lot of what you've built. And I think one of the things, I've met a lot of VCs, and one of the things I think you're one of the best at is storytelling, like creating a brand, building a brand. Even the name Boost for me, it's something that resonates. You'll remember.
So, I'll tell you the beginning of Boost because I think the story's funny and it won't be a very interesting story, even though you just complimented me on my storytelling. But my first company was a secondary market for private securities. It was called Expert Financial.
It was when?
It was 2008, right. 2009, that kind of time frame until 2010-ish, 2011. And right sort of the end of that and the beginning of, I guess the best way to think about this is my career was essentially started a company
straight out of
university with a guy named Thomas Foley, who I'm still fantastic friends with, and he's just an amazing guy. At the end of the 4 years of working on secondary markets, which I have a lot of thoughts on, but I won't go too deep on the intro of this. I had started to angel invest in a couple companies. A couple of those companies became, I invested in 20 deals. 6 of them became billion-dollar startups. Things like Coinbase, Amplitude,
Sure.
Benchling, Wave Mobile Money, Bitcoin, just a large list there. I, from there, was actually taking what I learned from Expert Financial, and I spun up a crowdfunding website. But the crowdfunding website, what we learned was, I just liked helping people get to wherever they're going. And so I was like, oh, well, there's this new thing called crowdfunding. I don't have money, so how do I connect them to money? So I fundraised for this idea of a crowdfunding website. And we called it Boost Funder. And I came up with that name. I'll tell that story right after I give this quick intro. And we realized no one really cared about the crowdfunding aspect of it. They cared that they were getting their first investment. And we were like, okay, well, we just raised $500,000. I think our investors would be okay with us pivoting to being able to help these founders. And so we dropped the funder and just called it Boost. And now we added VC. That was just because everyone kept thinking we were Boost Mobile.
Yeah, good point.
And so we added VC onto the end.
And that's 2012.
This is 2012, 2013. Yeah. And and so I was, South by Southwest was just happening in Texas this week, so it's relevant. That year, I went to South by Southwest when I was sort of thinking about this idea. And I was in a hot tub with one of my friends, and I was like, I want to call it something. I want a good name. And I was like, push, and I want to help the founder. I want to, and when you're coming up with a name, you just like go through a whole dictionary of different ideas. And he said, like Boost, and I was like, yeah, like Boost. And that was as long as I spent thinking about the name. It just like hit, and I was like, hey, that's a great name. And I didn't really look up who else was using it. There are other people who use
Boost Venture or something at the time.
Well, no, not at the time. No one had that. There was
like Boost advertising, Boost whatever.
There's a Boost weight gaining drink. There's Boost Mobile, and then there's Boost Juice, which is an Australian Jamba Juice chain. And I knew that because I was in Australia for a little bit at one point, and I think I think the name sort of stuck in there. I have positive thoughts on it. But that was the idea. So, and I have another funny story that was coming with the logo, which I'm very proud of.
It's been the same since I don't know if we can see it on the camera.
I think we made like one tiny change, but you wouldn't even notice if I showed two different logos. We added VC. So like when we added VC, I think we changed the logo just a tiny bit. But it's basically like the on switch.
Yeah.
OST, so it's Boost. And I went down to this guy who we were building the crowdfunding website with, and I was like, I have an email from this guy named Alon, who has been a part of my sort of story and journey for a long time also. And I go, I want it to be iconic. I want it to be red, white, and blue. And he made a red, white, and blue website logo, and I was like, I showed up to LA in the morning, and I was like, this is bad. It just doesn't look good. And I was like, let's search startup in Google. I searched startup, and it's like the power sign. It was on startups everywhere. That was all that popped up when he wrote startup. And I was like, okay, I'm going to replace the O with that. Let's try red. And so it was just colored it red. I was like, it looks angry. And then I was like, try orange. And then orange stuck. And I was just like, okay,
that's
print. So, I think that it's just sort of you complimented me on the storytelling. And I think that a big part of the Boost VC story has really been just doing things and making a decision and moving on, and then being consistent. And so like once we made the decision, we kept it. We didn't change it. We just left it. My last company, my co-founder would agree, we changed the name too many times. So once I had it, I just stuck with it, and like it was like to the soul of me.
Once you got a good name, gotta keep building on it.
You just keep it. And I think a lot of Boost VC's success has just been we try things, we iterate, we experiment, but we always are and that's been a big part of what has made us sort of relevant to the ecosystem.
Can you attribute, that mindset to something, to your childhood, to your past, or is this just your personality?
So, well, I'd say Boost VC was an amalgamation of a lot of things, like being raised by venture capitalists, and then also just my curiosities at large. I love comic books. That definitely shines through with most of our investments. And also our office. If you come to our office, tons of comic books all over the walls, superheroes all over the walls. And also the types of investments and theses we come up with, we generally put a superhero spin on, and that's been a big part of it. And then on the other side, I was raised by who I believe is one of the greatest investors of all time. I actually think he's the best investor of all time, and I've been in the game for 15 years now. I can actually say that, and it kind of means something. I've seen so many early stage investors. And my dad, who's Tim Draper, who started Draper Associates, which became DFJ, which he ended up evolving back into Draper Associates. He was, they were investors in everything from Tesla to SpaceX, but in the last 12 years, it was like Robinhood, Fivetran, Carta, like anything that you've thought of as a crazy thing. I was raised by this, guy who just hit stingers. And he has a model of venture capital that no one else replicates. And so I took pieces of that. Mm-hmm. I took pieces of what I saw Y Combinator doing, and I saw, and I was like, hey, these are like good ideas. Like do higher volume, get to know an industry, take chances on crazy stuff. And at the at the end of the day, that's exactly what Boost is. It's like, hey, we didn't know any better is probably the real part of the story. Is like it was me and my partner Brayton who we met on a double date at PF Chang's. And from that, I ended up with a wife and a business partner, and both have lasted many years. And and I think a big part of just not knowing what you're really doing, but like solving the problem in front of you and then borrowing from what you think are good ideas was really all we did. And so one of the problems that we established early, and you're on this podcast, so I also think this is relevant, is like, no one would write about us in the media. So I couldn't like figure out how to get our demo day publicized. I couldn't figure out how to, I've learned a lot about media since. But because of that, I started to blog and I started to podcast. And those two things have been incredibly helpful just for how my brain works. Like when you write, you get clarity. When you podcast, you learn how to interview, you ask questions, you learn how to storytell. And all those things, you're sort of training yourself to be the investor you need to be while you're doing it. And I think a lot of people would be able to maybe point at the career and be like, oh, I did this right. I just look at it as like a whirlwind of a ton of different things that we've done over the course of the last 13, 14 years.
Compounding year after year, getting to where you are right now.
To experiments. And we've evolved from, we were launched as an accelerator. We would write $10,000 to $15,000 checks, $15,000.
I remember. That was 2012, right?
That was 2012.
And you were one of the first one, by the way, into the old blockchain crypto.
So one of my earliest investments.
Even Coinbase, right?
Yeah, one of my earliest investments was Coinbase, and I didn't know anything about Bitcoin when I met Brian Armstrong, and we met at Red Rock. I always like to give context of where, because I thank Red Rock for the situation, It was in Mountain View, and I ordered a hot chocolate. Not that matters, with whipped cream. And he said two things that were interesting. One was, at some point the world will be on one financial infrastructure, which I was thinking, oh, why isn't it? We can communicate with anyone all over the world now with the internet, but why can't I pay anyone in the world? And then he said this could be $1 trillion market, and he was wrong. It's like a $3 trillion market in crypto now. But he was very, very thoughtful. I want to say that Brian's superpower is that he is just resilient and thoughtful, and he continued to move forward with whatever he was doing.
And you say superpower because you always try to attribute a superpower to every founder you invest in.
Yeah.
And that was his superpower.
That was his superpower. I mean, he also was courageous in very important moments, I would say, where in the center of the DEI storm in 2020s, he at Coinbase said, hey, we're losing time talking about all the diversity and inclusion. He didn't even say it that way. He was just saying, I'm on a mission, and if you're not a part, if you have a different mission, like go on that mission, but this isn't the place for you. This is our mission at Coinbase. And I think after that, everyone sort of fast followed in his footsteps, saying what their mission was, and like it allowed them all to sort of lay off a piece of the company that might have been, it wasn't a huge number of people, but it was sort of this justice center of tech that was going on. And I think that actually systemically changed technology over the next 5 years, where everyone got back to solving the mission that they were on, which if you are on the diversity mission, that's an incredible mission. But if you're not on it, it's a distraction. And so it's like, hey, I want to build this thing to solve everyone's problems. I think Brian's an incredible entrepreneur. I was very fortunate to be a part of that. I invested in Coinbase before I bet Bitcoin. I hadn't even heard of Bitcoin. And he was your first ever check
in the crypto space?
Oh, yeah. So I didn't. It was my first ever check into crypto. Period. But it evoked a curiosity about how money worked. And so we, at Boost, Brayton and I, we got together. His brother ended up being an incredible mind around Bitcoin, and he was sort of an idealist around how that money would work in the world. But he gave us a Bitcoin 101, and all of a sudden we were like, hey, we need to go all in. Like, we need to be known for something. And as a fund, that ended up being a really important part of Boost VC's history. The best decision we ever made was probably going all in on Bitcoin, because people knew why to come to us. It was a smaller group of people, but they knew why they were going to Boost VC. Now, we opened it up at some point, and that was a hard brand to balance. I think that we learned a lot from trying to build out like virtual reality and Bitcoin. Our 2015 fund was
a mix of both.
I have a pitch deck that's like Bitcoin VR fund.
Did you ever get pitched by a deal that was trying to mix both?
Yeah, and we did it because we were just like, who else, And we made money. It was called Mana. It was a Decentraland, which was a in crypto building up a metaverse.
Okay.
Crypto. And we ended, we were holders for 8 years, and then we ended up.
But again, it's part of your storytelling. I don't think many funds want it to be so. It's not controversial, but so marked as, we're a crypto in 2012, an accelerator in crypto in 2012.
Oh yeah,
you probably got good press, bad press, but
I mean, you're in the. How long has this fund been going on?
3 years.
3 years. So you've been doing this for 3 years, and there's a lot of like standards that have been created now where people are tracking TVPI or DPI or whatever they're tracking. We didn't know what any of those things were, for the record, zero. And what we did know is that success of a firm was being built on upticks, like up rounds. And because we did all these Bitcoin crypto stuff, no VC was investing in any of our deals. And
right, okay,
because it was just not a category anyone was participating in. And many of them ended up doing great. Like, we did fantastic. However, like, classically, 6 years into Boost VC, we have like 3 upticks, and we've invested in 200 companies or something. So like,
because these companies just went to profitability, like without needing.
It was either they were a token and they were able to fundraise from the market.
Right.
They went profitable because they realized no one else was going to be raising it. Or some people did some things where it was like, hey, if I'm betting on Bitcoin, I'm just going to take this money and buy Bitcoin and like just hope it grows, and I will work on my project in Bitcoin on the side. And all of those ended up, there were different line items there, but like all of those ended up doing pretty well, all those situations.
So how did you guys survive this? In the sense, like mentally, or you're like 200 rounds, three up rounds? Or 6 up rounds? I don't know what you said, but like.
How did we survive this? Well, we eventually performed well. That was really sort of one of the things. The other part was we had done a really good job. So people were an acquired taste, we realized pretty early. I wear orange pants. Like,
you can't, I don't know if you can see it, but that's your trademark.
But like, I wear orange pants. Like,
how many pairs do you have?
Too many. No, my 6. I have 5 to 6 pairs of orange pants, and actually the originals were bonobos, and I think these are bonobos too.
All right,
but they stopped making this color, and so you
have your custom made.
We have to get them dyed now.
Oh wow!
So like, if I have to get more, I have to get them dyed.
Well, you get like a red one, and you get it dyed, or
no, not red. So you get white,
and you get
more.
That's fine.
And to the point of sort of a consistent storytelling, like, when I realized this was what I was going to wear every day, I kept doing it. And I just did it for so long that when people saw me not wear it, they were like, why aren't you, like, is something wrong? Like, they're like, is something wrong? And I'm like, sometimes my pants are dirty, right? Like, I can't, like, sometimes you'll see me in jeans and it'll just throw you off, right? But it's like my suit. And that's also something I grabbed from my sister, actually, she had this podcast, or it was a show for entrepreneurs. It was like one of the first. It was called
Valley Girl. Yeah, I remember that.
fantastic. And she was a really early adopter, and she owned pink. Whenever I saw pink, I thought of her. And I was like, I want to do something like that. And so when people think of orange, I want them to think of me. And like that happens way more often than they want it to happen now.
This can be traced a little back to comics. You know, like comics,
100%.
you know what a comic, I mean, you don't care about his face, whatever he's wearing, you know.
I mean, this is basically an Iron Man t-shirt. Just, it's
a good point.
Yeah.
And blockchain, going back to comics, can you relate
the actual concept?
Yeah, the concept like decentralized. I mean, I guess you could say decentralized power to the people. And maybe there's a comics that talks about that.
So,
or maybe, I mean,
I don't think I think the entire thesis of Bitcoin is really about building an alternative to a system. And I think most comic books are about rebellions. And there is sort of this idea of doing something that's against the grain in order to, in every industry I'm in, whether it's defense, which was an Iron Man thesis, honestly, and it was and we ended up being kind of right there. And I have a blog post about the future of defense contractors in 2019. And then people started calling it American dynamism, and like,
and that's all the talk. Yeah.
But even in bio, like, we need an alternative to the healthcare system. We need a more peer-to-peer system for that. And so I think my entire career, the thesis is really about building these alternative institutions that are, I don't like the word sovereign because it's like a really weird word that people don't have so many thoughts on. Yeah. But like, I want sovereign software, sovereign technology, where it's like, hey, if I don't trust what the bank's doing, I want to be able to control my own money. If I trust what the bank's doing, I'm fine with them holding my money. Hey, if I don't like what the healthcare system's doing, I want to be able to diagnose myself. Like, that's the thesis. The thesis is fully like, empower the end user and the end customer with the abilities that these institutions have had. And there's a separate thesis that's just like, great people build awesome things. But like, in general, if I were to say the theme of my career has been that. It's been investing towards this sovereign technology.
And so you've been consistent, compounding, building, innovating. Mm-hmm. What would you say makes a good general partner, co-founder of a VC fund? Obviously, good investments, but beyond that, is it just constantly trying to think what's next?
Okay, so what makes a great co-founder or first off, it's a personality fit, right? My partner is incredible for me, and if that's what you're asking, where it's like, who would be a great like partner in building out a venture firm? He is just so brilliant, and but he's more like he is so thoughtful about everything, and I am constantly doing things. Right. And so between that, we say the magic happens. So it's like unstoppable force, immovable object, and we clash at times, but it's like, we always know when we're clashing, we're arguing over what Boost VC is, not calling each other stupid. And I think that part of a partnership is very important, where you're not like, you're an idiot. Like, we know we respect each other's skills. And
yeah, there's probably like 5% friction, 95% fusion. Or
100%.
But you come up with, how do you keep this energy between the two of you? Who comes up with new ideas? Who comes up with how to constantly, I mean, a lot of people see, I guess my point, my question better asked is, a lot of people see VCs as just like very static objects, right? Static companies. But the truth is, there's a lot of innovation behind VCs, and I think you're at the forefront of this. I guess maybe to segue to the second part of this interview, you're one of the very few funds, and you'll correct me, that's come up with a solution, at least in like the traditional VC way, to come up with liquidity for investors.
Uh-huh.
And I think you'll talk to us about this, but
I'm happy to talk.
Who came up with? You mentioned last year you returned $45 million to investors. I don't, which is half of the last fund that you raised, even though it's not the
return more, but yeah.
Okay. Not many funds can claim that.
So okay. First, I'm going to say what makes a good investor. Then I'll, which I think was the intent of that last question, and then I'll say like how we solve liquidity, which is,
million-dollar question.
This business is a beautiful business. Like, it's an incredibly long holding period. And I actually think that that's a feature, not a bug. Like, illiquidity is good. When it happens, when you get liquidity, it comes in big chunks. And like, so.
Wait, why is it liquid? I love this. Why is it liquidity good?
Because
you sell that to LPs?
Because, I mean, I think that you do need to be patient. You need LPs who understand the asset class.
Sure.
You need to be patient. And there are new gimmicks and tools that are changing this industry. But if I was able to sell it, if any VC is able to sell at any given time, when times are hard, you're going to try to sell stuff. But it's on the 15-year timeline that you get all of the value. NVIDIA is a great example. Like, NVIDIA, you could have held it for 20 years and you would have done exponentially better in the last 5, right? Same thing in all venture deals, is just like hold long time and all of it's in the last 2 years, all the value.
So it's interesting. So yeah, you ought to say to your LPs, if you don't believe liquidity is good, you're gonna be frustrated with me.
Yeah. I mean, you need to know what you're signing up for. Like, it's definitely a asset class where, all LPs have different reasons for investing in a venture fund. Some of them are looking for deal flow access to get directs. Some of them are trying to allocate, everyone has this circle of their portfolio where it's real estate. And they all have I have no issues with any of that. I think that it's just know what you're investing in should always be like a core tenet. And venture is on the spectrum of illiquid. I look at it as, it's a weird way of saying it, but it's like least consistent, most important. So anything you can do to make it more consistent makes you better at this asset class.
Yeah, that's been your signature, yeah.
Yeah.
And but the truth is, and I remember I went to an LPGP conference. You were one of the speakers, and people around you were saying, "Oh, we're struggling to raise our second fund, third fund, fourth fund," and they were saying, "Oh, because a lot of LPs are, as much as they buy the liquidity is good, they're used to, okay, these funds have returned the money within 5 years, and that's the money I'm going to use to re-up in the following fund." So we do have that problem. You've kind of find ways to, I don't know if it's go around that or sweeten the deal.
Well, I don't want this to be too much of a brainstorming session on how venture capital is going to be is changing, and it's changed even in the time I've been a part of this asset class. Like, it's changed in the last 15 years. I can't imagine how much it's changed over the course of my dad's career and my grandfather's career. First, I would say that the main thing that has changed is that there are more entrepreneurs than ever, which in some ways you could go two ways with that information. One is you go, oh, it's so competitive now. Who wins, right? Like, that's a harder world. But the world is better because there are more entrepreneurs. It's so cool. And we have so much more innovation. But when my grandfather was investing, there were, 20 deals in venture. And then when my dad was investing, there were 200, and now there are 20,000, right? But venture capital, the structure of 20 deal per fund, it hasn't really changed that much. I think just knowing that we have to evolve is a very important part as venture capitalists. I also think that there's a dividing line between later stage, which people still consider to be venture capital, and earlier stage, which is kind of the optimization of luck versus optimization of access. And everyone's definition of venture capital is different. Like, I think a lot of people think of venture capital as the needing to be in a deal that is high scale, high velocity, high. I look at it as need to be in a deal that's important for humanity and builds a business. And some of our best deals aren't going to be the ones that raise the most money.
Right.
Like, that's just nature of venture.
And going back to liquidity, Boost started with this very strong blockchain conviction.
Yeah.
A lot of these companies you invest in, they also issue tokens.
Yeah. Fair enough.
Which the fund actually gets access to.
Yes.
And you've said, and correct me if I'm wrong, that you've used some of those tokens to provide liquidity.
Yeah. So a really interesting thing that happened, it's a little like the obstacle is the way, right? Like all the pain we went through as being a Bitcoin or crypto related fund ended up paying dividends, literally. But we also became very understanding of how to manage crypto, which a lot of funds are just scared of it. So they're not willing to actually bank it.
More than scared, a lot of funds are not even allowed to, not even allowed to hold it.
Yeah.
Like
Ridiculous.
The LPA could say not allowed, or even sometimes the custodians are like, sorry, I can't do it.
So always invest where the most of the LPAs says you're not allowed. It's like an incredible investment thesis. That is my entire, like, I would love to be in all of those deals.
Like, yeah.
Just anytime most of the LPAs say like, don't own Bitcoin, you should own Bitcoin.
Sure.
Like, just look at it as a investment thesis that will 100% work.
I love when I'm investing in a deal and an expert of that industry says it's terrible, it's going to go bankrupt within 1 year, because you're like, all right, I'm onto something that if it works, he completely switched.
He or she feels something, right? Yeah. Like they feel something to this, so they're threatened. When you trigger that threatened gene,
right?
Yeah. I love that too. It makes me happy.
So a lot of people couldn't get access to this, but
liquidity in general. So liquidity, I'm assuming that the listeners generally know what venture capital firm is. We are paid broadly on management fee per year, which is 2%. So whatever you've raised, and then 20% is in carried interest above whatever you've returned. So like you need to return all the money, and then you start to get paid 20 cents on every dollar. And it takes a long time to return all the money. And that's sort of the asset class as it stands. What we realized was we did have to choose Bitcoin, but we bought some Bitcoin in the fund. Not
directly with the fund.
With the fund.
I love this.
So we bought it with the fund, which was counterintuitive. No one had really done it. Very few people had done this.
Sure.
In venture, like no one. But like,
maybe some crypto fund. Exactly.
Crypto fund.
But that's what I'm saying. Like in the traditional funds, you're the only one I know that's done that.
And we felt like bad about it. We were like, hey, but
to who?
Like, I mean, just like there was this, are we allowed to do this? Feeling, even though it's not an LPA, you're kind of like, whenever you feel that little gut instinct, lean in, because that turns out to be the best investment. You need to feel it in order for it to be a good win. And so we were like, at one point we circled up and we were like, well, we didn't do it in the last fund, and it would have been the best investment anyone has ever made in the history of mankind. Okay. Like it was, you mean, the price of every Bitcoin when we had our first fund and our alpha fund was anywhere between $30 per Bitcoin and $200 per Bitcoin, maybe a little more, like around there. Would have been the best investment of all time, right? Like there's nothing that has performed that well on the face of the earth if I just bought Bitcoin and held Bitcoin up until today. And so in the next fund, we were just like, hey, we're going to buy Bitcoin. And the reason was we were like, hey, all these companies are betting on Bitcoin. These are all the smartest people we've ever met. We are betting on this industry to work, which means that we need Bitcoin to work, which means our entire thesis is predicated on.
Yeah. You could almost put all the capital call that you haven't deployed yet into Bitcoin while you're...
That should have been what we did, right? Like it should have been all... Honestly,
call everything, put in Bitcoin.
Been like entrepreneurs, because we want the asset to do well, and we should have done 50% Bitcoin. Like that would have been probably the best model at that time. We did fine. We're happy. We put like 2 companies worth of money at that time into Bitcoin.
Okay.
And we realized at one point, by investing in a semi-liquid asset or a very liquid asset, when it's appreciated in value, you can sell it.
Those are the Bitcoins you used to provide liquidity, so, not necessarily coins of startups you invested in.
We did also have coins of startups where we were like, hey, we can sell a token. We can sell, like, hey, our LPs. There was this moment where we were like, hey, our LPs, Cotu and someone else had just given a great talk at, I think it was the All In Summit. And it was like, this year is 2023, 2024. This year is the worst returned year in venture history or whatever. It was like, that was basically the entire premise. And I looked at my partner, Brayton, and I was just like, we could return a fund. Like our LPs would probably be pretty thankful. it's sort of a good time to do it because we could. And we were like, and the price of Bitcoin's like, it's within a range that we would be happy with. And we have a couple of these tokens that are worth something too. Why don't we sort of like think about be thoughtful, but like distribute.
This is the best marketing tool, especially if you know you're going to raise a fund later on.
Yeah. And we were like, also, that won't hurt, hopefully.
I know that's not why you did it, but...
And we also didn't... I always think it's really good to zig when other people either can't or zag, like they can't do it or they zag. Yeah. And I was like, so we distributed. It was the worst. And so we returned, I think, a fund and a half in the worst year
just by selling...
It was selling a bunch of tokens. There were a couple other things. We had an exit happen at the same time.
Okay.
And so we collected all of it together and we distributed it, and it ended up being a pretty big exit. And that fund is an incredible fund. I mean, we're nearing a 5x on that fund. It was our first like...
You know what DPI is now.
Yeah, we do know what DPI is. DPI
and you have a great DPI.
Yeah, DPI is
You
great.
share it. You share it publicly.
So
5x for this one.
5x for this one.
Your latest fund is which number?
We're on fund. I won't even go to specifics, but basically this is our fourth institutional fund, and we would be eventually raising a fifth institutional fund. So right now we're in the middle of we've been deploying for about a year and a half.
Can you share whether on the later fund you kept that strategy of buying crypto?
Always buy Bitcoin. That's just my philosophy.
And so what do? You call you'll call 10% or you'll call 20% and you'll allocate the equivalent of 2 tickets into Bitcoin.
We always want to explain why we're buying it at that time. And I think we try to be very thoughtful about it. We've been watching this asset for 13 years. Like we do have a good instinct, I guess, about it. But we call, and we don't buy 20% of the fund. We're not betting the 20% of the fund on it. We're betting like 2 companies worth, right? Like we go and we say, hey, we're going to invest in 120 companies. 2 companies worth is going to be in Bitcoin. And we'll figure out when we buy.
And things have changed a little bit because you're a sci-fi guy.
Yep.
I think did you coin the term sci-fi?
We called it sci-fi tech for a long time, and then we realized everyone liked calling it deep tech, so we went in hard on
again.
Deep tech.
Okay. No, I was gonna say again. Everyone says deep tech. You're like, all right, I'm gonna find something else.
No, we did sci-fi tech first, and then we went deep tech with everyone because you kind of need to decentralize the voice. Like everyone when everyone's calling it something, like don't fight the like gravitational pull, because that was where all the most interesting deals were. It was all in deep tech. We are still investing in deep tech, but we also have done bio, which to me is deep tech, but other people don't consider deep tech. So we have to like expand outside of that.
But so your thesis has evolved. I mean, it's not evolved. It's naturally evolved. You're sci-fi comics, sci-fi.
It's very natural.
You still buy Bitcoins, even though I'm guessing not as much in percentage of your portfolio is exposed to Bitcoin or crypto or smaller. Blockchain, right?
Yeah, most funds were like, as we went, it sort of like decreased a little bit, 10% at a time. And now it's still probably like 15% is some crypto related like asset class.
You still use this as a tool for potential liquidity when the time is right.
Yeah.
I
believe Bitcoin represents innovation. So like when Bitcoin is going up and is going up, like it just means people are risk on and more innovation will be applied to the ecosystem. Venture capital is the asset class of human endeavor. Like it just makes sense that I should have an option of liquidity based off of that macro bet.
Am I wrong with saying you're still the only traditional funds who does that?
We're one of very few. But Benchmark did it around the time we did it. I heard they had, and Lightspeed went pretty hard in the paint. But other than that, no, I think very, very few.
It's funny.
I went around Silicon Valley when the price was $100, and I went to every venture firm. I was like, you should buy some Bitcoin. You should buy some Bitcoin. And like, no one did it.
You're like that. You remember that YouTube guy was like, he was like, I recommend you buy Bitcoin today. He's like a famous YouTuber or whatever. When it was like $1 or something. No, I mean, no one did it. Or I mean, I'm sure a few people did it, but
yes.
So it's interesting because everyone saw 2023. You guys returned 1.5x just by using, crypto liquidity.
Yep.
But still, I think no one does it.
No, it's also still a long-term bet. You do need to believe in Bitcoin and get to the bottom of how you feel about Bitcoin or crypto or any of those things. And it was always a part of our portfolio, so it was probably easier for us to say, like, we're going to continue to do this habitually. And we never did it out of popularity. We never did it at the...
Yeah, it's just strong conviction.
Just like we have conviction.
I mean, to the tune, and maybe we could go to the third part, to the tune, and I'll go right into it. You're such a conviction-driven fund. You're a pre-seed seed fund, yet you've led a $300 million growth round.
Great question.
Can we talk about that company for a minute?
Yeah. Well, first I'll say Boost VC, we are $500,000 pre-seed.
Please. Yeah. No seed. Sorry, I shouldn't have said seed.
Well, seed's okay.
Depends what you call it, right?
Pre-seed $500,000 checks in what we call the magical, the mutants, or the historic. So where we called it sci-fi tech, I just realized that there's this common theme of these founders that they are building something that's magical, making you a mutant, or it's historic, which does lead to a small modular nuclear reactor company that we backed in 2019, 2020. The founder's name was Doug Bernauer, and he started a company called Radiant Nuclear. And
So you preceded that company in 2019.
We wrote, we did our normal, actually we wrote a little larger than our normal check. So I think we ended up investing $650,000 because I was like, yes. No one has ever said nuclear in my office. You are saying nuclear, and this founder was, so Doug, he ran all the special projects at SpaceX. Boring company. He created the electrical engineering for the Falcon the flaps landing kind of thing. He's brilliant. And he realized in a meeting that it was Elon inspired it, but he realized that the math of space travel changes with nuclear. He was like, we need to get, in order to get there, we have to do it on land. And there's a lot of places rurally that we do need energy still. Doug is, when you meet him or talk to a founder or build a conviction in a founder over 6 years where you're just like, hey, I want to invest all of my money. I talked to my dad and my grandfather at different times, just saying I think this is the only company I want to join the board of. I'm not on boards broadly. I'm on 2 boards now. One of them is a comic book company called Skybound.
Okay.
And they own the rights to The Walking Dead and Invincible, which are 2. Invincible new season dropped last night at midnight. So if you want to watch that, you should. And then Walking Dead's one of the largest brands in sort of cinema history. But both started as comic books by a guy named Robert Kirkman. Loved the comic books. I cornered the market on Invincible #1s. And I joined the board. Radiant, I thought about it before the Series A, before Union Square Ventures invested. I actually I remember talking to my grandfather about this, and he said, you should do it, And then I kind of asked him if I could be on the board, but I didn't attach money to it. I was just like, can I be on the board? And then Union Square Ventures did the deal. I sort of dropped it for a little while. And then there was every company kind of goes through a fundraising cycle, and they ended up raising, I forget what each of them were, but the round before the round we led.
Okay, there was an extra round.
I thought about doing this during that round, and I was like, it's going to be a hard round to raise. The administration hadn't gone full American dynamism yet. Nuclear was still sort of a taboo topic, but I was like, this is the team if we ever do anything, and this is the biggest. This is we change energy, we change history, and this is a big deal. And then you wait too long, you're like, oh well, Andreessen Horowitz does the deal, or whoever does the deal,
and you got a fund to run,
and I got a fund to run, so I also am doing $500,000 check.
Yeah.
And there was this moment after they had raised the last round and the next round where I looked at my partner and I was just like, we are doing this. Like, it was like, there are enough data points to point to they will need more money no matter what. The wind is with them. And I think that we have a shot at being a part of one of the greatest companies in history. This founder is a one of one. Let's just do it. When you get that much conviction in someone and like, hey, it's still a startup. Like I know that everyone still goes through hard times. Like if you're truly changing the world hits back at some point. I know that there are going to be hard times and good times and all of the above. But this team, he had brought on an operations woman named Tori, who's just a maniac, incredible. And they have started to build out this incredible management team. And I was like, hey, we can preempt and like get in on the fact that there is no risk from my perspective now, engineering wise. They will build this nuclear reactor. And so I was like, okay, well, why don't we just preempt? And they said that we'd started to talk about it. It's a $1.7 billion company now or whatever. And so we had to figure out, do we have the conviction that we can actually, through our limited partners and our network, be able to lead this? Because our fund size, we basically had raised an $87 million fund, and 8765431 was the joke. We raised 87 million, 0.65431. And so on this deal, we were like, do we have the conviction that we can raise that much money for one deal? And we did. We partnered up with my dad at Draper Associates. Right. And that ended up being the best. That was a fantastic experience because he and I both had this conviction in this founder. And we went for it. It was really interesting. Now, I just gave way too much detail on a deal that no one probably was that interested in, other than it's like a huge check for a pre-seed funded. Right.
That's the point.
That's the point.
You're a pre-seed fund. We're conviction driven. A lot of people say we're playing casino. We're conviction driven. I mean, you more than anything. When you can say, you know what, this company, I'm actually going to call you the 300 million round. It goes to show your conviction.
Yeah,
it was the point.
And I've invested in 500 companies. And
you've done it once? I mean, not to say that the other companies are great. But...
I would have done it. The only other one that I tried to do something like it in was Coinbase. It was, and so I had this insane conviction on this deal. I just feel that this is a chance to be a part of history. Now, I'm going to use that to talk about sort of just trends in our industry.
Sure. We're in 2026.
It's a world where there's a secondary market. So you were talking about liquidity, like people do sell things now on the secondary market. Like if they invested in the seed of Stripe, they can sell Stripe on the secondary market and they can return capital to their LPs. People do this. Like they do, if you study a lot of these great funds who have been around a long time, they actually, before a company goes public, they'll sell some because you don't know if it's going to go up or down. And so a bunch of great funds have always done this process for liquidity. Liquidity is a very important thing to study, I think. What was I about to say about this? Oh,
the trends in the industry.
The trends in the industry is like, okay, I have a unique data set of 500 companies. I actually have a data set on larger than that number of companies where I have a relationship with that many founders. And if we know that there is a great deal somewhere, it shouldn't matter the stage. And so we're starting to see this emergence of big funds trying to get into the early stage and kind of sometimes haphazardly doing it. And then small funds doing these big deals. And so that is a trend that is going to happen more often. We were early, but we weren't the only that is ever going to happen. I've heard of a few that are starting to occur. And I think it's really exciting. It's kind of a way in which you as a pre-seed fund, hey, I have this conviction. If you have LPs that trust you, if you have investors in a network with you, it is a risk. Like you do take a risk by doing it.
Yeah.
Like, you need to make a promise you can deliver on. But if you deliver, like it's kind of really exciting time to be in venture.
I'm guessing your LPs, the fact that you've involved in them, they can't be mad at you for not spending time deploying their capital in the fund. Since you told them, hey, look, we have this great deal, we can help you deploy your capital in another deal.
Okay, so this is a really interesting thing. And you'd have to ask every LP's limited partner is going to have different perspectives
Sure.
on this very specific thing. But I actually believe that they want you to bring opportunities.
Yeah.
And so you actually build a better relationship by finding new things that they want to allocate to. It's special to find something that people want to allocate to. And so they feel, but they also know that it's a special thing, and it's a moment you get to build trust. And you're like, when you're open and like when you're really open about how and why you're doing it, people want to support. Like, people want to rally. They want to rally around you, and they want to believe. They want to believe you. They chose you already, and they want to believe that you want to do things. And so, as a fund manager, I think that like people chose to invest in you for a reason. And it could have been a wide range, but more than anything, they saw something in you where they saw that you would succeed. So you just need to keep giving the more opportunities where you have a chance at succeeding. And so there's an infinite amount of money out there. Capital is a commodity. But if you have unique insights, that's scarce.
We talked about nuclear and energy. That's pretty much what Radian does.
Yeah.
We're April, March 2026.
Yeah.
What excites you?
I turned 40 last week.
Happy birthday. 40?
Yeah.
Oh, nice. 86. You were born in 1986.
I was born in 86.
Great. What excites you for, now that you're 40 years old, what do you think is going to change the world, by the time you're 50?
What is going to change the world by the time
that you're going to invest in? There's,
I think I'm going to become my own doctor.
Okay.
I am going to be able to build my own robots.
Build your own robots. That's something we don't hear too often.
I'm going to have my own factory. I'm going to have my own... Dude, 3D printers are just magic that we overlook. It's incredible.
You're saying as a consumer, you're going to...
Me as a consumer.
Very interesting.
Sorry, me
No, I think we get it, but just to clarify.
Yeah, and then I will actually have... you will have the opportunity to have superpowers, whether that's cyborg-like or DNA-like or like genetic-like. I am kind of a great investor in this world because I have read every comic book known to man, and it turns out that this is like the comic book era of startups. Like, people are pitching
a great time to market.
Oh my God, it's like an incredible time to be alive. Also,
Agreed.
We've played with these AI tools are incredible. You'll be able to make a Pixar-like movie for like $1,000. Like, you're going to be able to tell stories in a different way, create new characters. And then also, I'm going to be able to 3D print medicine from like cancer or tumors or whatever at my house. Like, those things are going to happen. And I think also my dad's always really early on a couple things. He wrote a post about competitive governance at one point that went overlooked, and he did try to break California into 6 states and then 3. But I think we're going to go through a phase of governments really competing with each other, which is going to be good for the end consumer, and you'll choose what world you want to live in.
Kind of like the way Europe was like 700 years ago.
Actually, that's
like micro-states kept fighting for the...
Yeah. Right now, the most obvious is kind of like Florida, Texas, and California.
Yeah, good point.
Right? And like that's an obvious, hey, this billionaire tax is the greatest marketing tool that Texas has ever had. But like there's going to be more where Wisconsin's going to do something great for some specific economy. New Mexico evidently has an insane amount of capital as a government in order to create innovation, and a lot of it's from like mining rights. Like they sold mining rights to Texas Oil, and they have just a printing press of money that comes to them. And it's going to be an incredible opportunity for innovation, which was also the place where like the atom bomb, the Manhattan Project was built out. So I think, the optimist in me is like, you will, as an end consumer, we're going to move towards this concept of a creative economy where we are going to have to challenge the idea of what a human really is based off of what AI can do versus what you can do. But I think people will be able to enable their passions. I actually think real world is going to be more valuable, not less.
Yeah, sure.
And that's exciting too. So we're about to, I'd say we're about to encounter like the most fast-paced human experiential time, right? We're going to be trying out tons of stuff to figure out who we are.
The end of wage labor society too. I mean, I think it's part of like this whole, but again, that's another.
There's a chance. Incentives are strong. I when people think the end of wage labor, maybe. I think AI has a chance at wiping out a lot of knowledge work.
Sure.
And that's exciting. Because, hey, you know, I don't know if we were meant to be sitting in front of a computer 8 hours a day anyway.
Sure.
But I think we're about to find out what the next part is, right? We went through this labor world, physical labor, then knowledge labor, and now it's like, okay, what's next? And I think that we're living at an interesting time.
I got two last quick fire questions.
Yeah.
What's your superpower right now?
Wow.
If you, I didn't ask that question ahead. So if you had to say one superpower, your LPs, you know, when they're like, okay, I'm investing in Adam. Yeah. Is this resilience? Is this creativity? Is it fun?
So
I don't know.
It's first off, an incredible question. It's really funny. We were repitching one of our LPs, or bigger LPs, that we needed to be in a fund to anchor it. And it was 2017. And they said, why do founders come to you? And, you know, I basically said, you know, I could give you a long list of reasons, but at the end of the day, it's because we're incredibly likable. And
that's fair.
And like the entire room started laughing because I think the guy who brought us in basically said, I don't know, but I really like these guys. Like, I think it was like a thing that was a reference that I just hit the nail on the head of why we were even in the room to begin with.
It's a good superpower.
Yeah. And so I think that it's like, I would say there are a couple superpowers. One is I do work a lot, and I do I don't think you can really be on top of everything without spending the hours doing it. I am very, very competitive, especially with my dad. I like there are a couple of these things where it's like,
love it.
And I would say like my gift I was given is I imagine things better than most people because I've spent so much time on comic books. But the thing I'm most proud of is like, my 12-year-old self would be very proud of me. And I think we at Boost VC built a firm the way we built a firm. And we didn't do it the way other people could have done it because we only knew the way we could. And we solved the problem that was in front of us, and we always changed and experimented, and we wanted to stay on top of everything. And, you know, if you spend too much time with other venture capitalists, you're like, oh, I'm doing it wrong, but it's actually just I'm doing it different. And I would say I've built one of the most genuinely authentic firms that exists.
Differentiated.
Well, we could say it's differentiated, but I would even say it's just we built something that other firms trust. We're very collaborative. We want just genuinely the entire industry to grow. Like, I'm not trying to edge anyone out. I'm trying to help people grow. And I think that at the earliest stage is one of the best characteristics. Later stage, it gets a little more sharp elbowed. What you have, I don't have is kind of the mentality. We don't, and that's why they, you know, if you talk to a lot of these firms, sorry, I'm like dropping so much random things here, but like there's something that they call dark flow, which is like
dark flow.
Yeah, there's something called. So if you talk to a later firm, like a firm that's big and whatever, Andreessen, Sequoia, like all these other firms, they actually track the deals that other firms do.
Okay.
And they track their success based off of what percentage of the deals they did that they saw. So if they saw it, that's the percentage. So it's like 85% of the deals anyone else did, we saw, so that's valuable. They fear the 15% because they're like, these are deals we didn't see that we should see. Like we wanted to take a look. That might have been the winner, right? That is an early stage. I just realized like that we can't track dark flow. Like there's no dark flow. It's like two people and a dog.
Especially these days, right?
Yeah, especially these days.
When you said, yeah.
And so it's like, you can't track what everyone's doing, and you shouldn't. You need to be doing the things that give you energy and make you want to do the deal. And if you don't have like a unique perspective on, hey, why is this person giving me energy right now or not giving me energy in a deal? And I think my career is really about starting to articulate that better. Like you have instincts that work pretty well, and it's about articulating like why. I want to train the next generation of great venture capitalists. I would love if that was a big part of what Boost VC became, like being able to teach others the things that I was gifted.
I got so many more questions on that point, but I feel like we would need another hour. Fascinating. One last question. Which comics would you want to become if you could?
I mean, my favorite comic is Invincible, but if I were, I would.
Invincible. I mean, I guess it's a good one.
I'm going to tell two things. I'm going to say two quick things. One is, I love Spider-Man. Like I grew up on Spider-Man. It was my comfort food my entire life. Like I was offered jobs at comic book stores because I was in there so often because of Spider-Man comics. But I had the most, one of my most independent thoughts was while I was reading a Batman comic. And I was reading this Batman comic where, if you don't know the story of Batman, Bruce Wayne he's wealthy and he's able to go fight crime at night.
On his free time?
And I was reading this and I was like, why doesn't anyone do this? Right? Like, why don't we have more vigilantes in the world? And I really was curious. And I was like, how? And I started to actually put together a plan of how I would become a vigilante. Now, I haven't actually activated any of that, just so everyone knows. I am not a walking vigilante in the world. But
you could be a part-time detective.
But I feel it's really special whenever you have an inspired, unique thought that no one else has had. And every founder has it. They've earned some piece of information that they have troubled themselves with over the course of a long period of time. And that piece of information is what our job as venture capitalists, figure out what their insight is that makes them successful. And I am obsessed with treasure hunting for those. And that is a really, really fun part of like the job still.
Yes.
I do more deals than most people, and I have seen more pitches than most people at this point in my career. And the thing that keeps you going is really just that the fact that it's still sheer optimism. It is the best industry to be a part of if you are an optimist. You are not very good if you're a pessimist. Like you can't imagine a world where the world could be better.
Especially, these days, if you're on X all day, and then you got to say optimist, you got to be optimist.
And you can very much in Twitter brain, you can definitely degrade as like, you're like, wait, is the world bad? Is it not? Like our brains, I don't know if it was meant to be able to like absorb global news.
Definitely not.
At any given time and point. But which is why, I think protecting your brain is very, very important. I think figuring out how to cleanse it is very, very important. Also, I would say one of the things that habitually has been very helpful to me as an investor is just writing. Like writing is an incredible.
To this day.
Writing helps you think.
I thought you were going to say running, but.
I wish it was running. I'm just starting that up again. Yeah.
Adam, thank you so much for coming on this podcast. I had a blast. I hope you enjoyed it.
Great questions. Thank you very much. This is great. I went all over. There were a lot of things we covered. So I hope that any of it is relevant.
A lot of it is. Thank you so much. See you soon.
Hey, thank you very much.